Hi and welcome to the Market Alert for Friday the 21st of January 2022. So the market puked yesterday, the Dow down 800 plus points. What happened to buying the dip? Well, they're not buying the dip because Powell's threatening to increase interest rates and he's tapering. And as I put the headline, I think it was on Tuesday or Wednesday, it's starting to look a lot like January 2018, which it most certainly is. News for today, no major economic news. Retail sales for the UK at 7 a.m. They're to be forecast down. And then we've got the fifth day of our esteemed Davos set boys determining our future. 5 days of it in Davos this year. Lagarde, talking of criminals, she's speaking at 12:30. And 4:30 Yellen. Oh, they're all out today, aren't they? We've got the criminal elite in Davos. And we've got the convicted criminal, Lagarde, that's a fact. And we've got a potential criminal in Yellen as well. So let's have a look at the markets for yesterday, see what they did. We'll start off with the Dow. You can see the market sliding straight through the 200 MA there. On Wednesday, the market managed to put in some buying pressure at the 200 MA. And then took out the 34,633. The market back above this, desperately back above this today, which it will need to be. Let's just draw in the fibs from here all the way up to here, and you'll see also we're sitting at 78. So a crucial area for the market to find support, which it did yesterday. So let me just remove these. And let's see if the market can manage to make its way back. The only way you can draw any fibs on this one, because we might make a new low today, is just to select the fib tool and then just double click on the top of the bar, and that will measure the fib retracements throughout the range of yesterday's big bar. So as the market moves back, and see if it takes out any of these fibs or finds resistance at these levels. That's how it works in the daily chart when you've got a low that's lower than the previous day, so you can't draw the fib in from there to project back because we don't know whether the low is going to hold or not. We're certainly in oversold territory, a bit of divergence as well, and we're getting a bit of a cluster of volume as well at this level, which is interesting. We may come down to this level and retest because this is where the market then managed to move back to the upside. So there's always the potential of that, but a very, very important area. Here we've got the low to the left and 78% retracement. In the 30-minute chart, you'll see how much the market sold off. Massive. We were overbought. Crossover in stochastics, and the market sitting at the R1, then failing to hold as the market moved lower. MDI turned to red, parabolic to red. We also had some selling on the way up as well, or as the top of the market. And also then moving lower, tried to find some demand at the DP, which you'd expect, overtaken by selling, stopped at the close, and then traded all the way down to the S2 level before the close there, 800 plus points as the market fell out of bed. In the German DAX, different picture, very quiet, sideways is where we are at the moment, sitting at the 50% and the 200 MA, bit of demand in there as well, and oversold on stochastics. So the market finding a bit of support there. Might have a bit of a down move on the futures when it opens to the 200 MA, but likely to hold and then move back to the upside there. Unless, of course, we break this level, then we head down to 62, and then we've got the other fib retracements all the way down to the low, going all the way back to December, 20th of December to be precise, where the market found support. But the DAX currently holding quite well compared to the Dow, but then the Dow is going to be affected more by Powell's prospect of increasing interest rates come March. Amazing, isn't it? We're nowhere near March, and yet the market's already factoring in a rate cut. If they do it, I'm very, very sceptical. It just seems like deja vu to me, back to 2018, when the market dropped 1,000 points in a pre-market session, and they had to bring the QE back. So who knows? Depends what their agenda is. It's as simple as that. And in the metals markets, oh, actually, sorry, let me go back to the DAX. I haven't finished yet. So that was the daily charts. In the 30-minute chart, again, you can see exactly the same picture. Crossover of stochastics overbought at the previous day's high, market closing below the 5-bar moving average. They try to hold it, but then you get a retracement from here to here at the golden ratio of 62%, and then the market sold off all the way down. And you can see that we moved down 100, 200 points on the DAX, nowhere near like the 800 we had on the Dow. We've got a full 100% retracement to yesterday's low, and we're currently bouncing off this, and we've got the resistance to the upside in the DP, the 50 EMA, the close, all of these real-time resistance levels where the market's found some selling, and then also the market just coming above the 20-bar moving average and the 5-bar ticking up nicely. We've got a bit of demand, very, very light there, but nonetheless it's still coming off the low, and as I've mentioned before, the low very important indeed. In the 2 minutes for yesterday, let's just go back to the morning. We kicked off with a trade here which turned out to be a 22-point loss as the market came back, stuck at this resistance level, and then they shook the market out. Prices then moved lower. They bounced at this BRN, with the market moving lower thereafter, closing back above the 5-bar moving average, which is here in the DP level, to get back what we lost on the first trade there, plus a few points. And then in the afternoon, again, similar picture. The first trade is a loser as the market kicked off. It's just a shame that it came back towards the 200 MA first, retraced below the low to the left as well. But then the second trade moving to the upside, which you'll see here, and again closing back below the 5-bar moving average there, to still end up with a small loss on the trade of 5 points, accounting for the slippage. And then in the metals, I can't believe this. I have to say I'm really struggling, because I'm not used to the price of silver being allowed to move up, certainly not vertically, as normally it's been hammered to the downside, as we've seen for the last 12 months. Actually, since February of last year, when it hit $30 an ounce, it's done nothing but be hammered to the downside. So now we're at a crucial area, a major area here, because we need to get through this 200 MA, and you can see we've got selling pressure there, and we have a bit of divergence, and we're overbought. So we are due for a correction in this market. Unless it kicks off between Russia and the Ukraine, then we will see the market move high. But I'm hoping that we can get through this level here, which for me is the most important, as opposed to the 200 MA, and that's the $25 area. This is 25.40 more or less, but we need to get through and stay through that $25 level in order to move higher and have another look at the $30 level. Yesterday, again, you can see in the main session the price being marked up with quite a considerable pullback here in yesterday's session. It's certainly 50%, isn't it? 78% retracement there, and 62, but bouncing off this at the moment, but stuck at 24.50 at the moment. In the gold markets, nowhere near a bigger move as silver yesterday. And if you have a look at the gold-silver ratio, which is quite fascinating, because it's fallen out of bed. You can see there again coming back more or less, I would say 62, 78 as well. Level 75 down from 81, well, nearly 82 to 75, meaning that of course you've lost 6 silver ounce coins for the same money during the last week for the price of 1 ounce of gold. So yeah, it's a very interesting picture evolving in silver at the moment. Unusual for silver to not be moving to the upside. Right, gold. Yeah, a bit of selling around 78 yesterday, and also overbought some divergence there, as well as the market's making a new high, but the stochastics down slightly. Doesn't mean to say it's going to sell off, just needs to break through if it's going to continue to the upside and add a bit more momentum. And meanwhile, in the dollar, sideways for the last 3 days, which again is interesting, as you'd expect this to be either being hammered to the downside at the moment as the metals are moving high, but then again it's linked more to gold than silver. So the sideways move is consistent with the lack of movement in gold there. And then finally, in oil yesterday, a bit of selling coming into the market overnight, bit of weakness, but finding a bit of support at the moment as prices start to move back to the upside, but still at all-time highs in the, it's not all-time highs, sorry, 7-year highs in the weekly chart. Okay, that will do it for this one. Let's see what happens today, see if that weakness from the Dow continues when the market's open, or we get another bounce. Okay, that's it for this one. Have a great weekend. See you in Monday's edition of the Market Alert. As ever, thanks for watching. See you in the next one.